Hi, I'm Evaldo Albuquerque, and today I want to talk to you about false breakouts. That's one of my favorite ways to make money in the Forex market. So I'm going to use the Australian dollar to show you an example of a false breakout. So let me zoom in this area. And as you can see, the Australian dollar was moving sideways for a while last year, and it was moving between 1.05 and 1.07 inside this box. And as you know, a breakout occurs when the currency pair moves out of a trading range. So when it breaks out of the trading range, in this case they also broke to the downside. And whenever you see a sideways movement like this, it just means that there is a balance between buyers and sellers. It's almost like there is a battle going on between buyers and sellers, and when you see a breakout, you get to see who won that battle. If it breaks to the downside, it means that the sellers took control of the market, and in most cases, when there is a breakout to the downside, the price tends to move lower. And when there is a breakout to the upside, it means that the buyers took control of the market, and in most cases the price will move higher. But in some occasions you'll see false breakouts, such as this one. As you can see, the Australian dollar closed on this day. The Australian dollar closed below the lower line, so this was a breakout. But the very next day the Aussie rallied and closed back above that line, and that's what created the false breakout. There was no follow through after that breakout to the downside. The very next day they also rallied and closed above that line. So whenever you see a false breakout, you want to trade in the opposite direction of the breakout. In this case, the breakout was to the downside, so you want to buy the false breakout. There was a false breakout, so there was a buy signal right here, because usually when you see a false breakout to the downside, the currency pair tends to move a lot higher. And as you can see here, they also went from 1.05 to 1.10. Now let's take a look at what's going on with the Aussie right now, because it looks like it's having another false breakout. Let me show you what I'm talking about, and I'm going to zoom in this area. As you can see, recently the Aussie has been trading between 1.05 and 1.025. And that created this box with the Aussie moving sideways. So there is a balance between buyers and sellers now. And yesterday, when the Aussie closed above the line, it looked like the buyers were taking control of the market. But today the Aussie is once again moving lower and is now trading below the line. So it looks like we're going to have another false breakout in the Aussie. This time it was a false breakout to the upside, and so you can see the Aussie is now trading at 1.04, and this is as of Monday, April 30th. So it's looking like a false breakout, and the way to trade this breakout is to short the Aussie, because usually when there are false breakouts like this, the price tends to move lower, at least to the lower range of this to the lower line of this trading range. So that's how you play false breakouts. That's all I have for today. Thanks for watching.